Hey everyone, and welcome back to the channel. Today, we're pulling back the curtain on the stock market. Ever feel like there's a secret club of Wall Street pros who know things you don't? Well, you're not entirely wrong. But the good news is, their secrets aren't magic. They're strategies, mindsets, and pieces of knowledge that anyone can learn. And today, I'm sharing some of the most important ones with you. We're going to bust some myths and reveal what really drives success in the market so you can stop feeling like an outsider and start investing with confidence. Ready to level up your investing game? Let's get into it. First up, let's talk about the biggest secret of all. The pros don't try to time the market, and neither should you. You hear it all the time on financial news. Is now the right time to buy? Or is a crash coming? The pros know that trying to perfectly predict market tops and bottoms is a fool's errand. It's like trying to catch lightning in a bottle. Instead, their secret is time in the market, not timing the market. They focus on the long-term power of compounding. Think about it. The best market days often happen right after the worst ones. If you panic sell and jump out, you'll likely miss the rebound. The real secret is to invest consistently through the highs and the lows and let time do the heavy lifting. It's boring, it's not flashy, but it's how real wealth is built. The next secret is something the big firms don't like to advertise. Fees are a silent portfolio killer. A 1% or 2% management fee might not sound like much, but over 20 or 30 years, it can devour a massive chunk of your returns. Let's do some quick math. If you invest $10,000 and it grows at 8% a year for 30 years, you'd have about $100,000. But with a 2% annual fee, you'd only have around $55,000. That's nearly half your potential earnings gone. The pros are obsessed with minimizing costs. They use low-cost index funds and ETFs instead of expensive, actively managed mutual funds that rarely beat the market anyway. The secret is to read the fine print. Pay attention to expense ratios and trading costs. Every dollar you save on fees is another dollar that's working for you. Here's another one they don't shout from the rooftops. Emotions are your worst enemy. The stock market is a giant machine designed to test your emotional discipline. Fear and greed drive the average investor to buy high when everyone is euphoric and sell low when everyone is panicking. The pros do the exact opposite. They have a plan and they stick to it. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." This means they see market downturns not as a crisis, but as a buying opportunity, a chance to buy great companies at a discount. The secret isn't to be smarter than everyone else, it's to be more disciplined. Create an investment plan before you start, define your goals and risk tolerance, and don't let a scary headline knock you off course. Now, let's talk about diversification. You've probably heard the phrase, "Don't put all your eggs in one basket." But the professional secret is a bit more nuanced. It's not just about owning lots of different stocks. It's about owning different types of assets that don't all move in the same direction. This is called asset allocation. This means having a mix of stocks, bonds, real estate, and maybe even some commodities. When stocks are down, your bonds might be stable or even up, cushioning the blow to your portfolio. The pros spend a lot of time figuring out the right mix for their goals. The secret is to think of your portfolio as a team, not a collection of individual superstars. Each asset class has a role to play, both in generating growth and in providing stability during tough times. This next secret might surprise you. The pros read a lot. And I'm not just talking about stock charts and quarterly reports. They read history, psychology, biographies of great business leaders, and annual reports, especially the shareholder letters. Why? Because investing isn't just a numbers game. It's about understanding human behavior, identifying long-term trends, and recognizing the qualities of a durable, well-run business. Reading a company's annual report, especially the letter from the CEO, gives you insight into the leadership's philosophy and long-term vision. This is something that a stock chart can never tell you. The secret is to go beyond the ticker symbol and really understand what you own. You're not just buying a piece of paper. You're buying a piece of a business. Okay, here's a big one. Boring is beautiful. The financial media loves to talk about the hot new tech stock or the next big thing that is going to change the world. It's exciting, it gets clicks, but it's often where amateur investors lose the most money. The pros, on the other hand, often make their fortunes in boring but essential industries. Think about companies that provide things people need regardless of the economy: consumer staples, utilities, waste management, insurance. These companies may not have explosive growth, but they are often incredibly stable, pay reliable dividends, and quietly compound your wealth year after year. The secret is to resist the temptation of chasing hype. Look for established companies with a strong competitive advantage, what Buffett calls a moat, that can protect their profits for decades to come. Another key secret is the power of rebalancing. Let's say you started with a portfolio of 60% stocks and 40% bonds. After a great year for stocks, your portfolio might have drifted to 70% stocks and 30% bonds. You are now taking on more risk than you originally intended. A pro will systematically sell some of the winning stocks and buy more bonds to get back to their target 60-40 allocation. This does two things. First, it forces you to sell high and buy low, the holy grail of investing. Second, it keeps your risk level in check. It's a disciplined, unemotional way to manage your portfolio. The secret is to set a schedule, maybe once or twice a year, to review your portfolio and rebalance it back to your desired asset allocation. It takes 5 minutes, but makes a world of difference. Here's a mindset secret. The pros think in terms of decades, not days. Wall Street is obsessed with quarterly earnings. Did the company beat expectations by a penny? The stock might soar. Did it miss by a penny? The stock might tank. This short-term noise is just that, noise. The true professional investor is asking different questions. Will this company still be relevant in 10 or 20 years? Does it have a sustainable competitive advantage? Is the management team trustworthy and thinking about the long term? Focusing on the long-term business fundamentals rather than the short-term stock price fluctuations is a game changer. It allows you to ignore the daily drama and focus on what truly matters for building wealth. Finally, the ultimate secret that ties everything together: continuous learning. The market is always changing. New technologies emerge, consumer behaviors shift, and economic landscapes evolve. The best investors are lifelong learners. They are humble enough to know that they don't know everything, and they are constantly seeking to expand their knowledge. They study their mistakes to understand what went wrong. They study the successes of others. They never assume they've figured it out. The market has a way of humbling those who get too confident. The secret is to stay curious. Read books, listen to podcasts, follow smart investors, and never, ever stop learning. Your education is your greatest asset. So there you have it. These aren't complicated formulas or hidden algorithms. The secrets of the pros are really just principles of discipline, patience, and common sense. Focus on the long term. Keep your costs low, control your emotions, stay diversified, and never stop learning. By adopting this mindset, you can move past the hype and anxiety and start investing like a pro. You have the power to build a secure financial future for yourself. Thanks so much for watching today. I hope you found this information valuable. If you did, please give this video a thumbs up and don't forget to subscribe and hit that notification bell so you do not miss our future videos. What's the best investing tip you've ever received? Let me know in the comments below. Until next time, invest wisely and stay patient.